Hi, this is PR Sundar. Welcome to this special episode where I am going to talk about IT stocks. IT stands for Information Technology. Generally, what happens, the stocks are divided into two groups. The defensive stocks are usually perform better when the overall market sentiment is bad. And the other side, so cyclical stocks or growth stocks, they tend to do better when the economic cycle is very good. I'll give you one example. IT is considered as a defensive sector. Why it is considered as a defensive sector? So let us say our market, our economy is not good. If our economy is not good, what will happen? Our currency will depreciate. But IT stocks, what they do? So they prepare the softwares, they sell it abroad. They receive the money in dollars. So naturally, when the economy is bad, when our currency is depreciating, and that is actually good for IT stocks. So IT stocks tend to do better when the overall market is down. And similarly, pharmaceutical stocks. Say for example, 2008 to 2014, that is after the Lehman Brothers collapse, the market was down, not really very good. But if you look at the Sun Pharmaceuticals, it went from 100 rupees to 1200 rupees between 2008 and 2014. What happened? Even during coronavirus and lockdown, people cannot go to work. But IT stocks have done exceedingly well because IT stocks people can always work from home because they are just preparing the software. But what has happened this time? Rupee has actually depreciated from about 72 rupees about 1 year before to almost 83 rupees now. It's about 12% currency depreciation. But despite that, IT stocks are doing very, very badly. You just look here, this is an NSE website. So if you are looking at the Nifty, so in the last 365 days, Nifty is down by about 1.38%. So this video is being shot on 23rd of March. So the Nifty is down by 1.38% in the last 1 year. But you look at the IT index. So in the last 1 year, it is down by 22.38%. Nifty down 1.38, IT stocks down by 22.38. But during this period, rupee from 72 rupees, it has gone up to 83 rupees per dollar. So what is basically wrong with IT stocks? Now, though it is true that IT stocks are defensive and the markets tend to do badly, they to do well, but this time the story is different. What is the main story? The main story is that IT stocks, IT companies, they usually prepare the software and sell the software to foreign companies mostly, and mostly they cater to three industries: banking, financial services and insurance. So what they call it as BFSI: banking, financial services and insurance. So these are the three major areas where they do software. But what has happened? Because in US, in the last 10-15 days alone, the three banks have collapsed. The Silicon Valley Bank, the other two banks I forgot. There are one or two more banks which are under trouble. The First Republic Bank, which is still in trouble. And in Europe, the Credit Suisse has collapsed, but it was taken over by UBS. Now, what happens? Those banks which have collapsed, so they might not be buying the software from these software companies. Or even if they had bought already, probably if the money to be given, so because they have collapsed, file for bankruptcy, so the money will not come. So that is one issue. Credit Suisse did not collapse. Say for example, if I am preparing a software, I sell the software to UBS, I sell the software to Credit Suisse. So I have two customers, two sources of income. Now what happened? Credit Suisse and UBS has merged into one bank. Now I will have only one customer. So only one software I can sell. So these mergers, acquisitions happening globally will reduce the income for IT industries. and many banks are collapsing. So then they are losing the customers. And in addition to that, in US, they keep on raising the interest rate. And when the Fed keep on raising the interest rates, so the banks will be in trouble because the money that they've lent, because the rate of interest goes higher, the people may not be able to repay the loan. So they may default it. Say for example, in 2008, so that is what happened. So many people could not repay, so they just left it. When the prices crashed, they repay the loan, that loan will be more than the property value, so they stop repaying. So the banks came into big problem. So during this kind of unusually very high interest rate scenario, so the banks tend to be prudent. So they will try to control their expenses. So when they try to control their expenses, they will be spending less money on software products. One can say rupee has gone from 72 to 83, but then those people also know, so because they are already in trouble, so they may ask IT companies to reprice the products. Because of this, the currency depreciation, in the short term may be positive for IT stocks, but long term, the contracts will be rewritten, renegotiated. At least when the US banks are not in trouble, they don't mind spending few more rupees, but now they are already in trouble, so they will have to calculate even every rupee that they are spending on this software product. You look at the screen, in the last 1 year, now Emphasis is at 52-week low, Infosys very near 52-week low, Wipro also very near 52-week low, and Wipro has fallen 40% in last 1 year, Emphasis 43%, and Infosys 27%. So you can see the huge underperformance. L&T Technological Services 31%. So this kind of huge underperformance shows that there is something structurally changing for IT stocks. So until this US inflation comes under control, US Fed stop raising the interest rate, or at some point of time they start decreasing the interest rate. So only then, this IT industry may stabilize. Until then, IT companies will have lot of challenges. And of course, those days, they used to depend only on US markets, but nowadays, many Indian IT companies, so they are well diversified. But the problem is that they are well diversified to Europe, and Europe is also under trouble because this Credit Suisse is from Europe only. Though some IT companies, they do service to the local companies also, like Indian companies also, but still, this US problem and Europe problem, particularly the banking problem, will definitely have some impact in the IT stocks. So, is it the right time to buy? So, I would say if you want to buy, if you are a very, very long-term investor, 3 to 5 year time frame, you can start buying some quantity in SIP. So, that means, you buy something now, then every month you buy some shares. So in top IT companies like Infosys, TCS, Wipro, like that. But if you want to invest a lump sum amount, I would say that this may not be the correct time to invest. And because Indian markets are already in problem. I can just show you one thing. So this is the money control website, so where I have taken the FII DIA data, and you look at this month, continuously FIIs were selling. Every day they are selling. And look at the last few months, February, January, December. Of course, November they bought, that's why the market shot up. But if you look at few months before, December 2021 to June 2022, 2, 4, 6, 7 months. That 7 months, almost every month 40,000 crore, 45,000 crore. So first thing is that structurally Indian markets are facing some problem. And nobody knows why FIIs are selling in such a huge quantities. In fact, in 2023, India is the only major market which is down more than 10%, whereas most major markets are in green actually. So first thing is that structurally we have some problem and our markets are not doing well. And out of these, IT stocks are even more underperforming because of this US banking issue. So if I want to invest a lump sum amount, definitely I will wait at least for another 1 year until this US things settles down at least. So right now the US Fed keep on increasing the interest rate. So the banking sector in US is very fragile, and that is being reflected here also. And here also banking stocks, look at Kotak Bank, which is almost 2-year low. And for the last 2 years, HDFC Group has given almost zero return. None of the HDFC Group stocks did well. The banking and financial sectors are problem here also, and that will be reflected in the IT stocks. If you are a long-term investor, because the stocks are trading at attractive valuations, but you need to have a lot of patience. And if you want to invest, go for a SIP, and lump sum is not advisable at this point of time. If you are a momentum investor, and wait for all the dust to settle down, and then you can buy the stocks. So please remember, I am not a SEBI registered investment advisor. I am not a SEBI registered research analyst also. So I am just giving my views. So consult your financial advisor before taking any position in the stocks. Hope you enjoyed watching this video. Thank you for watching.